Hello, this is Team Loan Comes to Vex. Hope you're doing well today and you get some good trades. Today I had a trader write me and ask me, when it comes to Fibonacci retracement levels, do I use the 78.6 Fib retracement level or do I use the 76.4 Fib retracement level? Really, the difference between the two is minor, and oftentimes it's a personal preference depending upon the trading platform that you're using. One might be standard at 78.6 while another may be 76.4. Some platforms out there don't even show either one of them. But there is a difference between the 78.6 and the 76.4. So what is that difference? Well, 78.6, which I prefer to use, and I found to be overall a better number between the two based on personal experience, 78.6 is the square root of the golden mean number 61.8. So when we get back to the real Fibonacci numbers and Fibonacci sequence and Fibonacci ratios, I prefer the 78.6. Now, for those of y'all not that familiar with Fibonacci numbers, these are numbers that are found in the natural world, found in mathematics, found in science. And it's interesting that when we divide the numbers one into the other, we get back to the golden mean of 61.8. And oftentimes I've found in trading that so many systems and algorithms have the Fibonacci levels built into them that the market moves to those levels and trigger certain orders in the marketplace. Now, when it comes to the 76.4, I've found that that's simply a difference between the 100% minus the 23.6%. Some refer to that as an inversion. And that's a level that sometimes it is as well. Again, the difference between them pip-wise is very slight. I found personally over the years the market has a tendency to go more towards the 78.6. I think there's a few things you need to know. Number one, the 78.6 or the 76.4 is a reversal pattern. We're looking for the market to fail going any higher than this because in the bigger picture, number two, is that it's forming the right shoulder of the head and shoulders pattern or an inverse head and shoulders pattern. So when I step out, whether I'm looking at the 78.6 or the 76.4 with the euro yen, if I take a look at the daily chart, you'll see on the daily chart that we have this high, and then this high comes in as the right shoulder of a head and shoulders pattern. That right there is about the neckline. That's what we're looking for. So we'll look for a failure when we get near this level and for the market to fall back over based upon a bigger chart pattern. Another thing to consider too is that when you're trading this pattern, looking for a reversal, is to consider what price has done. We can see here that based upon the Trader's Dynamic Index, for those of y'all using the synergy model, that the market made a 1, 2, 3 steps up and couldn't go any higher, and it came in line with about the 78.6, and then we had the fall back over. Those are key things to look for when you're trading the 76.4 or the 78.6 Fib retracement. We're simply looking for a reversal. So, long story short, the 76.4 is the difference between the 100% minus the 23.6. And some people like that, and some platforms it's standard that way. Whereas in other platforms, I found that the 78.6 is preferred because it is the square root of the golden mean number 61.8% for those of y'all who are familiar with Fibonacci numbers and ratios. Well, that's really, in a nutshell, my take on the 78.6 versus the 76.4. It's a minor point. We're looking for the same thing, a reversal pattern to set up, whether it be in price action or in the chart pattern. Now, specifically, like I said, I prefer the 78.6 because I like to look for confluence, either in a larger fib or smaller fib, so I have two fib levels coming together, or look for previous highs and lows. I found in my personal experience that the market tends to favor the 78.6 along with previous highs and lows. If we take a look at this, if I put a horizontal line at that 78.6, you can see here that the market hit this low point. And if I go across, you can see that the market hit that low point there, these lows back here, If I continue to move along, hit a high point, and some other highs, and some other highs. This happens also from time to time on the 76.4. I've just found personally that the 78.6 gets hit more times than not. Regardless of the two, look for a reversal pattern. Sometimes step out, look at the bigger picture, look for that head and shoulders or inverse head and shoulders pattern, because the 78.6 or 76.4 could be the right shoulder of one of those patterns. Well, folks, this is Dean Malone with CompositeX. Hopefully some of the information I've shared with you here about the 78.6 or the 76.4 fib retracement level will help you in your trading. Y'all make it a good day. Get some good trades. We'll talk to you next time. Bye-bye.